Hello, everybody. Welcome to Monday. The S&P 500 was up 0.36% today. Really, the big catalyst from today was AMD, one of the semiconductor companies, had a deal that they set up with OpenAI. And we've had several of these different deals happen, and the companies kind of take off, like we saw what happened with AMD stock. It really just shows kind of the real power that's behind this artificial intelligence trade. I mean, if you look at the broad market as far as that goes, it was actually slightly down. If you look at the NASDAQ 100, the top 100 stocks in size on the NASDAQ, it was actually up 0.75%, almost double, a little bit more than double than what we did today on the S&P 500. So, the driver is definitely AI, and it's been the big driver really honestly since the 2023 time period when Nvidia had their huge earnings breakout. And we're starting to see, all of this money being forced into these data centers. And of course, semiconductors are going to be at a premium, especially the ones that are made by Nvidia and AMD and such. So that was the big driver today. Continues to kind of push the market forward. We have a lack of other data. We have some data reports that aren't coming, didn't come last week because of the government shutdown. The market's been up, I think, almost every single day since the government shut down. So, unfortunately, that doesn't have an impact on the market. At least up front here, we can see maybe, if there's a cumulative, pressure from all these different sources, but we're still a ways off from seeing, tariffs kind of be pushed into consumer prices to see what's happening there. I think what we are seeing already is that companies are absorbing those tariffs, but they're also cutting back on labor costs, so they're not putting out as many new jobs. President of the chairman Powell said he called it a low hire, low fire market. So basically, not really adding new people to the overall scheme, trying to save some money there, but not really letting people go either, kind of hoarding some of the employees that we do have as a whole. So that's kind of the direct result. And I think what will happen, though, is eventually they're going to need to hire people to continue their growth, and you're going to see more and more the cost of the tariffs be passed through to consumers. And I think that will be kind of the litmus test to see, how this economy and/or stock market can continue to do well. So, certainly, 3 years into this bull market run here, we're starting to see some of the little bubbling pieces that are happening. Probably not even close to where we're going to be if this continues. If we look back at the 2000, .com bubble altogether, if you look at the characteristics of that, we're on path. We're doing some of the same things, but that was a 5-year run, and the end of it was quite crazy. So the thing that could take away that crazy to the upside is some of these headwinds, with the situation with deportations and tariffs and Fed independence and such too. So we'll have to see, who wins and if this market can continue to go at the level that it has been. So good time to be in the market. Kind of fun to watch all these things happen as far as that goes, and look forward to talking to you again tomorrow. Thank you.